Hi again, Mullenites. I hope you're all doing really well. So clearly, as we've been talking about on here for a while now, that Mullen Automotive is in the midst of a dire situation as the stock marked today its 10th consecutive day trading below $1, closing at a dismal 34 cents per share. This represented another 10% drop in its share price today, and it's becoming increasingly clear that the market has serious doubts about Mullen's ability to turn things around. The company is facing a perfect storm of financial challenges, and its future on the Nasdaq is hanging by a thread. One of the most pressing concerns is Mullen's financial health. According to the company's most recent earnings report, while total assets stood at $192 million as of 30th of June 2024, the cash position has dwindled to just $4 million, a sharp decline from $155.7 million at the end of September 2023. This rapid depletion of cash raises serious questions about Mullen's ability to fund its operations and meet its obligations without resorting to more dilutive financing measures. And that's where the potential issuance of up to 85 million new shares comes into play. Mullen has filed to resell these shares, which could be triggered by the conversion of notes and the exercise of warrants. If these shares are issued in full, it would represent a staggering level of dilution for current shareholders. To put it in perspective, there are currently about 24 million outstanding shares pre the last earnings round. The introduction of 85 million shares would more than quadruple the current share count, significantly diluting the value of each share. Though I think the share count is a little bit different now following the earnings, and another issue I'll talk about soon. So the potential dilution comes at a time when Mullen stock is already under severe pressure. For investors, this is a double-edged sword. Not only is the stock price plummeting, but the value of their holdings could be further eroded by a massive increase in the number of shares outstanding. But perhaps one of the most troubling aspects of Mullen's current situation is its approach to executive compensation. Despite companies' declining stock price and deteriorating financial position, Mullen has continued to issue significant stock-based compensation to its executives. This practice is particularly hard to justify when the stock is trading at such a low level. Essentially, the company is issuing more shares to compensate its executives, which dilutes the existing shareholders' equity even more. This brings us to the broader issue of shareholder equity, which has taken a significant hit. Mullen reported shareholders' equity of just $53 million as of 30th of June 2024, down sharply from $272.8 million at the end of September 2023. This reduction reflects the company's ongoing operating losses, the impact of stock-based compensation, and other equity transactions. For shareholders, this raises serious concerns about the alignment between the company's leadership and the interests of its investors. When a company is struggling as much as Mullen is, every decision should be made with the goal of maximizing shareholder value. However, the continued issuance of stock-based compensation at a time when the stock is trading at pennies per share suggests that management may not be fully aligned with the goal. Adding to the pressure is the looming threat of delisting from the Nasdaq if Mullen cannot regain compliance with the $1 minimum bid price requirement. The company has already conducted multiple reverse stock splits in its attempt to prop up the share price, but these measures have only provided temporary relief. The potential for more dilution through the issuance of 85 million new shares only compounds the challenges faced by Mullen. As Mullen Automotive continues to grapple with these issues, the path forward is fraught with uncertainty. Investors are right to be concerned not just about the stock's short-term performance, but also about the long-term viability of the company. Without a clear and effective strategy to address these financial challenges, restore investor confidence, and navigate the complex landscape of the EV market, Mullen's future remains really highly uncertain. For those still holding on to Mullen stock, the coming weeks and months will be critical. The company's next moves could determine whether it can stabilize and recover or if it will continue to spiral downwards. As it stands, Mullen has a lot to prove and the clock is ticking. As always, share your thoughts in the comments below about Mullen Automotive. And until next time, may the markets trade in your favor.